ultimately, Bitcoin, I think, will go to another speculative blow off. And normally that blow off has been about 2 times fair value. So in 18, we got to 20 on a fair value of 10. In 21, we got to 60 on a fair value of 30. And this time, I don't think we do double. Why? The reason I don't think it does twice this time is there's not as much leverage. Most of the leverage has been dissipated because the SEC sued all the big leverage providers and made it really difficult for people to get 100x. Now, you should never buy an 80 vol asset with 100x leverage.
Mark Yusko, the CEO, founder, and chief investment officer of Morgan Creek Capital Management, identifies 2 pivotal events in the Bitcoin market that could potentially drive prices up to $150,000 by the middle of the next year. According to Yusko, the approval of a spot Bitcoin ETF and the upcoming Bitcoin halving, scheduled for April 2023, are poised to trigger a new rally and substantially increase Bitcoin's fair value. Currently, Yusko believes Bitcoin's fair value stands at $55,000, but he anticipates it will double following the approval of the spot Bitcoin ETF and the 4th halving event. This halving will reduce block rewards for miners from 6.25 Bitcoin to 3.125 Bitcoin per block. Yusko further asserts that by the middle of the following summer, $100,000 will be considered fair value, with the potential to reach $150,000 due to speculative forces. Yusko also delves into the possibility of a spot Bitcoin ETF gaining approval from the U.S. Securities and Exchange Commission. He suggests that the BlackRock spot Bitcoin ETF is likely to be the first to receive approval, citing influential connections and relationships as significant factors.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
We blow right through that 150 and things get really, really, really crazy because we saw that, right? We don't have to hypothesize, Scott. We know exactly what happens when you put $20 billion of demand into the Bitcoin ecosystem. 4 years ago, we saw that. We went from 10 to 60 in about 6 months. Why? Because GBTC. Everyone forgets. We've seen this movie before. It wasn't as pure. An ETF is more pure. The money goes right in. With GBTC, a qualified purchaser had to buy the shares in the private market, wait 12 months, and then feed them, feed the ducks into the public market. But that asset went to $20 billion from zero. And it didn't happen over 6 months, but that parabolic part did. And that was 20 billion. Now the market cap was smaller, so it was about roughly the same percentage. It's funny when you talk about this topic, people are like, hope is not an investment strategy. You're just hoping because, it's down so much. Like, no, I'm just doing the math. Because when prices were 70,000, you didn't see me on your show or anybody else's show saying, this is really cheap. You should really be loading the truck up at this price. Because it wasn't. Fair value is 30,000, 33,000. The market cap, the price had gotten to 70K. That was stupid. Well, why was that stupid? It was because of gambling. There was too much leverage in the system. And then everybody's like, well, it became a speculative asset. Like, no, it didn't. It was the same asset it always was. Uncorrelated stocks, uncorrelated bonds. No. The correlation went to 1. Like, yes, that's what happens in liquidations. When you get a stock market crash and people get a margin call because their Netflix stock went down 70% and their, Amazon stock went down 55%. Let that sink in for a second. One of the largest companies in the world went down 55%. And you get a margin call. You don't sell Amazon. You sell Bitcoin or gold or cash or bonds. And so all the things that are liquid went down faster. And so the correlations do go to 1 momentarily. Now the correlations actually went negative for the first time a couple weeks ago. But on average, Bitcoin is 0.15 correlated to stocks, 0.0 correlated to bonds, and it's going to stay that way. It's the perfect diversifying asset. Not only should you have the 1% just because you should probably have 2 or 3 or 4% because it's the best diversifying asset I've ever seen. And I've seen them all. I mean, I've been alive long enough to see when we used to have only bonds.
Years.
What it is, again, it's back to that greed and fear. It's just pure greed. And buying something because someone else will pay you more for it is not an investment strategy. And you say, well, but Bitcoin has no utility. Like, no, Bitcoin is, I believe, digital gold. It is a scarce asset that has better liquidity and lighter weight. The Hal Finney quote, God rest his soul, is amazing, right? I can envision a day when banks might use Bitcoin the same way they use gold today and issue deposits on top of it because it has, great lighter weight and less friction. That's what it is. It's a technological evolution of an asset that has existed for 5,000 years. And it's extraordinary technology.
With the market actively seeking bullish catalysts, Yusko emphasizes that the introduction of a Bitcoin ETF would hold immense benefits for Bitcoin and the broader crypto space. He points out that BlackRock, the world's largest asset manager, boasts an almost perfect track record in obtaining ETF approvals. He anticipates that this streak will likely continue with BlackRock's Bitcoin ETF application. According to this Bitcoin enthusiast, the BlackRock ETF could potentially open up a $30 trillion market for institutional investors who were previously hesitant due to regulatory uncertainties. Even if the ETF captures just a fraction of these assets, Yusko believes it would significantly impact Bitcoin's trajectory, particularly considering its low free float, the limited number of Bitcoins available for trading. Let's return to the video to hear more from Mark Yusko on the topic of ETFs.
Buy it today, buy it tomorrow, buy it next week, buy it next month, because it doesn't matter what price you pay. What matters is owning a piece of the greatest and most powerful computing platform the world has ever seen. That's what Bitcoin is. It is the most powerful computing network the world has ever seen. And it provides a function. It provides a better accounting system for the base layer of money than anything we've ever seen in history. And not to own that, I just think is imprudent. And what you pay for your share is kind of irrelevant because you're going to want to own this thing in perpetuity. So but I think it's really funny to watch her be just as skeptical at 29 as 4 or 5, wherever, 4.5 years ago when we were on together at 8. The number of 55K is absent the ETF, right? The fair value of 55K, which is what we'll march toward by the halving, right? We'll march toward fair value. Then fair value will change on the halving event, and that pushes it to 100. So 100 has nothing to do with the ETF. What the ETF has the potential to do, and I totally agree with Tom, it has the potential to really mess up the supply-demand dynamic because you're talking about a $550 billion asset, right? And so an ETF, when the ETF is approved, and I'll give it 50-50 chance on October 17th. So on October 16th, they will deny or push the Bitwise application, the same way they pushed Kathy's application on Monday, right? And we're investors in both, right? We own a little piece of Amun and we own a little piece of Bitwise, and I wish both of them would get approved because the first one that gets approved gets everything.
AUM.
It's the victor takes the spoils. So I wish one of them would get approved, but it's not going to happen. BlackRock will get approved, and they're going to be first. So October 17th, they're third in line. Could they get approved on? Yeah, 50-50. More likely, they push them 90 days into 2024, and it gets approved either in January, or they might push it another 90 days and get it right around the halving. those people don't care about how things look and optics. They're like, we are manipulating this process. We aren't going to do it the way it should be, which is whoever put in first should get it. We've decided the winner. We're the kingmaker, even though that's not their job actually. But let's talk about this. So you got a $550 billion asset. When the BlackRock ETF is approved, that basically opens up 30 trillion-ish, and this is from Eric Balkunas, who did the analysis, and I agree with him, 30 trillion of assets under advisors and RIAs that right now are prohibited from owning the asset. Like, I have a family harmony account at UBS. My brother-in-law is there, and I have some money with him. And I say, can I buy GBTC? No. UBS says no. Can I buy a mining company that does Bitcoin mining? No. So they don't let you do anything. Now, it's not as bad as I understood. Merrill actually wouldn't take you as a new account.
I heard the same, actually, anecdotally.
You made your money in crypto.
Yep.
It's like, are you kidding me? Anyway, so they'll take drug dealers and all kinds of other people, but they won't take Bitcoin. But pharmaceutical reps. Anyway, so 30 trillion, let's say you get 0.1%. Okay. That's not really aggressive. 0.1%. That's $30 billion. Well, Mark, 30 billion on 550 billion, that's not going to move the needle. Wait a minute. Remember, roughly 80 odd % doesn't trade every day.
Yeah.
About 20% of the market cap. So let's call it 100 billion for round numbers. 100 billion trades every day. Okay, 30 on 100, that'll move the needle. But let's think about this. Is 0.1 reasonable? Like, if you're an RIA and you got clients clamoring to put, are you going to put 0.1 or are you going to put 1?
Bitcoin recently fell below $26,000, marking its lowest point in nearly 2 months, while Ethereum also dipped to $1,551, nearing a 2-month low. A significant factor driving this downward trend is the global surge in interest rates, particularly in the United States. The 30-year Treasury bond reached 4.42%, its highest level since 2011, and the 10-year yield of 4.32% is just 1 basis point away from a 15-year high. The crypto market has been eagerly awaiting the SEC's potential approval of a spot Bitcoin ETF. However, there's uncertainty surrounding the SEC's timeline for making a decision, given the numerous pending applications. Another positive catalyst could emerge from a favorable court ruling in Grayscale's lawsuit against the SEC, seeking to convert the Grayscale Bitcoin Trust into an ETF. Despite these potential developments, Bitcoin's volatility remains a prominent feature. Furthermore, the CFTC's report on the commitment of traders revealed that leveraged funds, hedge funds, and commodity trading advisors have increased their bearish positions in CME-listed cash-settled Bitcoin futures. 2/3 of their positions are now short, representing the widest bearish sentiment since April 2022. Interestingly, the crypto market has shown indifference to recent positive developments, such as PayPal's introduction of a stablecoin and several applications for futures-based ETFs tied to Ether.
For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.